The International Monetary Fund and the World Bank are hosting their annual spring meetings under the shadow of US tariffs and concerns of a global economic slowdown in the coming months. Hello, I'm Arden Blythe, and this is The Heat. How much damage are trade wars inflicting on the global economy? That's one of the main talking points at the International Monetary Fund and World Bank meetings this week. As Owen Fairclough reports, there's also a question over continued US financial support for these organizations.
When the International Monetary Fund last took stock of the global economy, just 3 days before Donald Trump was inaugurated as US president back in January, the outlook looked rosy, especially for the US, with the IMF forecasting a healthy 2.7% growth in 2025. But now delegates from across the world are gathering here in Washington, D.C. for the annual spring meetings the IMF hosts jointly with the World Bank, just weeks after Trump sank global stock markets by announcing hefty tariffs on trade partners just about everywhere.
Most of those tariffs have since been postponed pending negotiations. But how much of Trump's actions and the ensuing retaliatory tariffs changed the landscape? The head of the IMF gave a strong hint while previewing these meetings last week.
What we see this time around is a very sharp increase in uncertainty. But the economic fundamentals are still quite strong. This is why when I spoke about what you should expect from us next week, I stressed there would be markdowns, but not recession.
No recession, but the extent of those growth forecast markdowns will be laid bare on Tuesday in the IMF's latest outlook, with policymakers looking for solutions on trade and tariffs.
Ultimately, trade is like water. When countries put an obstacle in the form of tariff and non-tariff barriers, the flow diverts. Some sectors in some countries may be flooded by cheap imports. Others may see shortages.
Other items on the agenda include the IMF's recent $20 billion bailout for Argentina and the first Syrian delegation visit to this forum in at least 20 years.
If Trump and tariffs remain the overarching talking points at these two institutions this week, one discussion on the sidelines is likely to be Washington's continued financial support for them. As the White House reviews its membership of international organizations, the head of the World Bank said last week he did not yet know if the US would commit to a $4 billion fund to helping the world's poorest countries. Owen Fairclough, CGTN, Washington.
Okay, time to bring in our panel. Here in our studio, Otaviano Canuto is Senior Fellow at the Policy Center for the New South and former Vice President of the World Bank. From Oregon, Liang is Chair Professor in Economics at Willamette University. From New Jersey, Anthony Chan is former Chief Economist at JPMorgan Chase & Company. And from Sao Paulo, Brazil, we're joined by Gilson Schwartz. He is a Professor of Economics at the University of Sao Paulo. Welcome to all of you to the show. Otaviano, let's start right here in the studios. Well, of course, this year's spring meetings of the World Bank and the IMF come at a very crucial time. You know, looking at the headlines in the Wall Street Journal today, and it said it all. You know, markets in turmoil, the dollar's being driven down, there are tensions between the White House and the Federal Reserve. Now, you've been at the World Bank, you were Vice President there. So what are the priorities for these meetings taking place this week?
Well, it's a pleasure to be here again with you. First of all, it's a very peculiar week in terms of annual spring meetings, because everyone is waiting for the report that is going to come, demanded by an executive order by the President Trump, about the participation, the relationship between the United States and these institutions. So we don't know exactly what's coming out of it. We saw last year report by the Heritage Foundation outlining a possibility that I believe it is minimum of the U.S. leaving these institutions. I don't think this is a likely outcome, but definitely there will be requirements, for instance, for the institutions to increase their power, their capital, and so on. So, but in the in between, there will be a lot of you know, waiting to hear in order to react and so on. I guess an important signal in that regard was given last week in a convention at the FAO in Rome, where the acting U.S. executive director demanded changes in the approach and the focus of the FAO towards less engagement with DEI issues and so on. So we may have something similar coming in the case of the Bretton Woods institution. But everyone is on a wait-and-see mode.
Just on these meetings this week, I mean, there was a little bit of a reassurance from the managing director of the IMF there when she said, look, uncertainty, sure, but the economic fundamentals are solid.
I can explain this. You have a dichotomy between, on the one hand, the figures that are coming about the first quarter of the year, where the performance has been extremely good. The CAPEX, the physical capital formation, has been very favorable, job creation and so on. And the GDP is going to be good. The figures will be good. But that reflects a lot the past and also the anticipation of the tariffs that led many agents to purchase in advance goods and so on. So, and this purchase in advance before tariffs, it fades out. Whereas looking ahead, Madame Kristalina Georgieva said it all, and tomorrow morning probably you're going to see a very important upgrade in the global economic prospect. Because now we have the uncertainty at high levels. One way or another, we believe that one can believe that the levels of tariffs after this negotiation will be much higher than before. And we see signs of stress as well in financial markets. I would call attention tomorrow to another report by the IMF, which is the Global Financial Stability
That's right.
Report.
I'm going to talk about that in a minute.
Because they will approach probably what's happening at the U.S. bond market.
Liang, that report that Otaviano is talking about, the IMF will release that economic outlook report tomorrow, Tuesday. Now, the managing director did say that there will be a markdown, but not a recession, so growth will slow down. What kind of impact are these tariffs going to have on global growth?
Yeah, good to talk to you, Anand. So I think the managing director actually pointed out the three major negative impacts of this tariff war. And interestingly, the first one that she talked about is not the direct impact of this tariff, but rather the indirect impact, which is the uncertainty, this very heightened uncertainty as Trump rolled out these policies in a very unpredictable on and off way, right? So we now know the reciprocal tariffs are the 90-day pause, but no one knows what is going to come out after the expiration of this 90-day pause. So I think that heightened uncertainty is really hamper the global economy when it comes to investment decisions, consumption decisions, supply chain decisions. So I think that is very damaging. And the second one is definitely the tariff itself is going to obstruct trade. According to the WTO, they're expecting trade to decline by 0.2% this year, as opposed to an increase by 3% as they earlier forecasted. So there's a direct impact of this trade in disrupting, the supply chain and the consumption and investment decisions and so on and so forth. And then finally, I think this, sort of the retaliation and all the other, tariffs that are being set up as a retaliation methods, that in the long term is going to undermine productivity. So that is more of a medium long-term impact on the global economy. Now, last but not the least, I also wanted to add one more thing that she didn't talk about, which is the entire geopolitical system. I think, the erosion of trust that she emphasized, I think it's also going to have really long-term impacts on the decisions from the entrepreneurs to government officials to the kinds of multilateral, institutions, right, that we see the IMF and World Bank in their rhetoric now seem to really trying to move towards what the U.S. would consent. And so I think that is really undermining their own autonomy and their their helpfulness, right? Their ability to really help to the rest of the world to develop and to cope with some of the very important climate emergencies and so on and so forth.
All right, let me bring Anthony Chan in on that question of trust. Anthony, how seriously has trust eroded?
I think that Professor Liang is correct. There is lots of uncertainty out there. We're certainly seeing it in the United States, but even when you look at global uncertainty indices, they are rising to very, very high levels. When you look at the question about whether or not you have independence of the Federal Reserve, the president saying that he has the authority to fire Jerome Powell.
Yeah.
Jerome Powell saying he's not going to go. These are just not good things for the bond market. And in fact, if you look at the bond market, what you're seeing is that bond yields are rising. And guess what? Historically, that means the value of the dollar should be rising. And in fact, the value of the dollar has been declining. So there's clearly been a break in the level of confidence in financial markets out there. And Professor is correct. When you look at businesses, they have to plan capital expenditures for the next couple of years.
Yeah.
And everything is changing, not every couple of years, not even every couple of quarters, but almost every day, almost every week. And that certainly is too much uncertainty to have any planning whatsoever with capital expenditures. And the last point I would make is, in the first quarter, we're seeing a lot of factors out there. You're seeing a lot of front running with the tariffs, as you heard previously. That means that imports into the United States are higher. That lowers real GDP, but you're also seeing consumer spending picking up to avoid the tariffs. Think about cell phones, think about cars, all those things that people thought might have tariffs. Again, you're trying to front run to all that. So there's a lot of distortion in the economic statistics, and that will come off in the second half of the year. There is no question.
Right, and Anthony, you mentioned the uncertainty there, and the managing director of the IMF, Kristalina Georgieva, she also had this to say. Let's listen to her.
Protectionism erodes productivity over the long run, especially in smaller countries. Shielding industries from competition reduces incentives for efficient resource allocation. Entrepreneurship gives way to special pleadings for exemptions, protection, and state support. This hurts innovation.
So, Anthony, getting back to the United States itself, President Trump believes that the pain will be short-lived and there will be long-term gains for the U.S. economy. Do you agree with that?
It's very challenging to agree with, because the theory of comparative advantage tells you precisely what you just heard, that countries that actually produce things with higher productivity and more efficiently, those are the ones that should be producing those products. If you start violating that, then you don't have the efficiencies, you don't allow productivity to be realized, and of course that sacrifices global economic growth. So that's why tariffs actually do two things. They slow down global economic growth, and they also increase prices. You can argue it's only a one-time adjustment in prices, but it's only one time unless you get several rounds of these tariff increases that actually occur with retaliation. And every indication we've seen so far is that you're going to see retaliation from all the countries involved.
Gilson, Schwartz, to what extent could we see a rearrangement of global trade in the wake of these tariffs? I mean, I want to go back to that analogy that the IMF managing director used there. She says, look, international trade's a bit like water. When you put up a barrier, it makes its way around those barriers in some way.
Well, we have to stress the long-term perspective, that's for sure. And in the long term, the levels of uncertainty have certainly reached an unprecedented level in financial markets. But let's also remember that Trump's actions are not exclusively focusing on tariffs. It's really a struggle to put down, to destroy maybe 50, 60 years of very hard work, intensive, gradual, long-term construction of globalism. Trump, as well as other extreme right thinkers and politicians all over the world, they are really against globalism. They're against it's not just a matter of tariffs or trade. They're against competition on a global level field. So I think that in the long term, we are not dealing now just with the expectation of maybe some gains in 6 months or 1 year from now. We are actually witnessing the dismantling of globalism. What's the alternative? Probably a new feudalism or a new decentralized protectionist environment. That's something we still don't know. But one thing is for sure, these guys and Trump leading, they are battling against globalism.
Right, I've heard that argument about the dismantling of globalism, Gilson. But, you know, we've also heard from analysts who say, look, globalism will survive, multilateralism will survive. The difference will be that the United States will not be at the center of it.
Well, that's one thing we have to see, because the geopolitical dimensions of the anti-globalist perspective are really war and destruction or invasion or occupation of territories. So we are right now still going through a very violent stage of international relations that are also being dismantled. It's not just the economic globalism, but it's also the liberal order and the belief that we would actually rebuild or renew global institutions like the IMF, the World Bank. Everything is collapsing, the World Trade Organization. And also, let's remember, there's a huge technological battle. Technologies are now in a turning point in history. Artificial intelligence and completely new design of the relationships between humankind and work and labor. So it's really a fundamental shift. I don't believe it's just a matter of rebalancing the US power. It's really a much more ambitious challenge, that is to redesign a cooperative international system, going through a geopolitical quandary that involves a major technological change.
What are your thoughts on that?
Well, I see the risks of fragmentation, as alluded by Gilson, as really very high. We're watching this kind of compartmentation of trade in at least one or two. Well, one of them, China, is at the core. The other one is, of course, the U.S. It is, but also we can note how there is a sort of a coalition of willing, reuniting other countries to keep the structure as much as possible, even if, as you said, the U.S. opts to stay out. But we are watching things like, let's say, the enhancement of the likelihood of the agreement between Mercosur and the European Union. We saw meetings, something unthinkable until not long ago, reuniting China, Japan, and South Korea, talking about the trade and so on. So my point is that we shall evolve towards a more fragmented framework, including in finance. We might also watch an increasing fragmentation of the global financial system. But at the end of the day, the reaction by the other non-participants of this dispute between U.S. and China may make their effort exactly to maintain some sort of a multilateral structure.
Right. Liang, do you foresee some kind of a rearrangement of world trade where, you know, major exporting countries will look to other markets, other more stable markets, I should say?
Right. So I think that has already been going on. I think China has learned a lesson from Trump 1.0, and it has now trading more with global South countries, BRI participants, than with the United States. So the U.S.'s, you know, share of China's exports has gone down from about 20% back in 2018 to now only 14.6%. So I think at least China has been diversifying, and we know that other countries have been also doing the same thing. So I think, you know, that goes back to your question about what is the sort of new world that would look like. I think that is a very interesting question. I think we're making the history right now. I think either we'll live in the sort of the rule of the jungle, right? The U.S. is going to go after every country and try to make a deal, however unequal that deal might look like. You know, that Japan and South Korea are now, you know, in active negotiations with the United States, and yet the U.S. does not quite exactly understand what they are demanding. These countries are trying to do. But then at the same time, we know Xi Jinping has just finished his visits to the 3 Southeast Asian countries and made a total of 113 deals. And so I think, Africa has already been, having China as the largest trading partner instead of the United States. So I think the rest of the world will move on with or without the U.S. on board. BRICS countries would definitely play a more, active and dominant role in trading and so on and so forth. So I think, the world can go either way. Either, the U.S. is going to still reign and trying to have the power play, or other countries would form together. And I, personally, of course, I see the more likelihood of the latter, just because I think the U.S. has done enough damage to its own credibility. So even now, the close allies like South Korea and Japan would have no choice but to diversify and search for, other reliable partners.
Anthony, I want to get back to something that Otaviano spoke about a few minutes ago, and that is the U.S. commitment to organizations like the IMF, like the World Bank as well. I mean, in February, President Trump, shortly after taking office, he ordered a pretty sweeping review of United States relations with all international organizations. In fact, he's got his, I guess, ideological partners in the Heritage Foundation, the conservative think tank here in Washington that is guiding a lot of this. And they have urged a withdrawal from the World Bank and the IMF. They describe these two organizations as expensive middlemen. But at the same time, the IMF and World Bank are a good deal for the United States, aren't they?
I think they are, because when you have the rest of the world making progress, it creates markets, it creates stability, and so it is a good deal for the United States. But if you look at what's been happening in the first, say, 100 days, there's been an emphasis on cutbacks, whether it be aid, foreign aid to other countries. And so that's why these organizations have to be really watching very, very closely, because if there is any risk, the risk is not to increase the allocations to those organizations. The risk is more to cut the allocations. So what happens over the next week, over the next couple of months in that regard is certainly uncertain. But there is real risk that the next step will not be to increase allocations, but rather to cut allocations to those organizations. And that would be a big detriment to the global economy.
Gilson, Schwartz, there was an opinion piece in the South China Morning Post which claims that the Trump tariffs put us, and I'm quoting here, on the brink of a systemic financial and economic crisis that will make both the 1997 Asian financial crisis and the 2008 global financial crisis look like a picnic, unquote. What did you make of that?
I do believe that we are facing a major disruption, and that it includes in the horizon the military uncertainties. We know from the past, from the 19th and the 20th century, that populism and protectionism always lead to unrest, always lead to social disequilibrium. We know that populist regimes try to connect directly with the people. And if you think about the effects of these tariff shocks in many poor countries, what we see is that social unrest is very likely to be on the rise. So what's the solution when there is no economic progress and social unrest is on the rise? The only solution we know is violence, more expenditures on arms, more expenditure on keeping track of progress, but not actually including people that have been marginalized over history. So Otaviano, my good friend Otaviano, glad to be here with you. But he already mentioned that we are facing fragmentation, and the social unrest that goes with it. That implies that it's not only economic uncertainty, but options for non-democratic solutions to social unrest.
Otaviano, yeah, go ahead.
These policies are really being dismantled. So social unrest and populism lead to more violence and military action.
Otaviano, is it perhaps time now for collective action, instead of countries making their own individual bilateral deals? I mean, something perhaps on the basis of how the world reacted to the COVID pandemic.
Yes, in the sense that, the idea of a coalition of willing that I referred to goes exactly to that. That is to say, those of us who are countries that want to maintain and the framework, the multilateral framework as it was build up if we have to live without any individual country, even if large, let's say the U.S., to participate in it. But we need to keep. That's exactly the idea ventilated let's retake the WTO. Let's make a reform so as to make it possible to return to good function. Take the multilateral financial institutions. Well, if one major shareholder does not want to increase the capital, the commitment, okay, then the other countries might, pledge to replace indirectly or not. This is an important point because you aptly said the lack of will to put more money in these institutions, that will affect particularly the parts of these institutions that operate with low-income countries, with concessionary loans, which in the case of the World Bank Group is the IDA, the International Development Agency. Mr. Biden made a pledge of $4 billion, a certain amount of money, which is negotiated each 3 years, and which underpins the concessional operations by the World Bank Group. Whereas the IBRD and IFC depends on the capital allocation. Even the, let's say, an exit by the United States, this hypothesis that I would attribute a low likelihood, the money that the U.S. would recover is so little that it is not really worth. But what matters is to have other shareholders that might step in to replace a lack of will by the U.S. to boost the capital of these institutions.
All right. Anthony, one final point, and I've just got a minute here, and that's something that was mentioned earlier on. That is these tensions that we see between the White House and the Federal Reserve. I mean, how important is it for the president right now to clarify this position rather than this continuing the way it is?
I think it's very important. I mean, you're already hearing some rumbling in the credit markets that somehow foreign investors are stepping back. I recently wrote a Substack article on that point, that when you look at foreign investors, including the foreign central banks, they hold almost 30% of U.S. treasuries. If there's a risk that somehow either they don't continue to hold that share, that's going to cause some instability in the markets. We know that the stock market, the S&P 500 from the peak in February, is already down $8.1 trillion. And that's still before any move or firings have taken place, just the talk of it. And you're seeing all this turbulence. So it is very important is my real answer to your question.
Okay, and that is where we have to leave it. Thanks to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington.